Great. Well, with that, I want to welcome everybody who's been able to join us at the hour to what I believe is the 12th EMEA, the Agribusiness Market Ecosystem Alliance, AgTech Exchange. And we're really pleased to have Emata here with us. And Bram and Lillian will be speaking here in a moment. If you can go to the next slide for me, Bram. Just to do a round of introductions, my name's Casey Harrison. I'm the director of actually impact and learning at Newer International now. My title's just very recently changed, but my other role is here at EMEA as Nuru being a member of EMEA, is the lead of the AgTech working group. And then we obviously have the stars of the show today. Bram and Lillian will be the ones presenting on their technology and service provision through Emata. Next slide, please. Just as a few, for those of you, if this is your first exchange webinar, we always kind of just do an overview of our priorities as a working group within the EMEA network. And this is just so that others who might be coming new to the working group can get a feel for what we spend our time on collectively and the time we're volunteering to this network, because we all obviously have other work to do and jobs and organizations we work with. But we have a guide that we launched this year, a second edition. We have a third edition we're working towards into 2022. And then really the heart of all of this is the number 4, which is these exchange webinars to create dialogue and discussion and question and answer with ag tech service providers across the development space. So next slide. And with that, I'll do the introduction, but just a few housekeeping things before I pass it over to Bram and Lillian. One would be, if you have any questions, please ask them in the chat during their presentation. Also, for the sake of our colleagues all over the world, I'm going to go off video once I'm done speaking, and hopefully only Bram and Lillian will stay on video just to save people's bandwidth. And if you have a question during the Q&A session, just use the raise the hand function. It helps us sort of keep the flow of the questions coming in, and I'll help to sort of moderate the questions to Bram and Lillian to make sure we try to get to everyone's interests. So with that, Bram, I'll pass it over to you.
Brilliant, thank you. And obviously, thank you to the EMEA network for inviting us here today. We're very excited to explain to you what we do, and even more excited to discover today how we could hopefully work together in the future. So indeed, I'm here with Lillian, who is our product manager, and I'm the CEO of Emata. And we're just going to start at the beginning, right? So why did we start Emata to begin with? And that is because there is a very stark contrast between, on the one hand, how important agriculture is to the African economies. And of course, I don't have to explain this to you since you all work in agriculture. But I always like to show this graph where you sort of see, right, looking at East Africa, particularly, that it accounts for nearly 30% of GDP, which I find absolutely staggering. So on the one hand, right, you have this agriculture that is almost the engine of all the economies in Africa. But on the other hand, there's almost no loans or formal loans going to the agricultural sector. And that is the little red bar there, right? Of all the loans given into the East African economy, only 3% goes to agriculture, which obviously is in no relation to how important this is. And this is a very big problem because, right, if farmers can get access to loans, they can't invest in their farms, right? They can't use proper inputs at the start of the season. They can't invest in irrigation. They can't buy, high quality breeding animals, etc., etc. But I know I'm preaching to the converted, and I guess many of you have struggled already, in your work with trying to get loans to your farmers, and yeah, banks are not very helpful. We've tried to politely summarize the reasons why banks aren't too helpful, and the first one in the blue boxes, right? They want a lot of documents, right? Land titles, accounts, audited accounts ideally, which of course, yeah, only a few farmers in at least in Uganda have. Then banks are, yeah, they're kind of inefficient. So they have fairly high operating costs, which makes their loans quite efficient. And that is a problem on itself. But it's an even bigger problem if you're a farmer, because a farmer tends to want, right, a small loan just for the season. And if the bank makes a lot of cost because they take 9 months approving a loan, and you just want a loan that is small for a couple of months to get through the season, that doesn't work. The economics don't work for banks. So as a result, banks are not really there for most of the farmers, and farmers are forced to use informal money lenders, which of course are very expensive, but as we know, tend to also be the cause of side selling, right? That farmers tend to deliver their goods to these informal money lenders, as opposed to, the organizations that you're all working for. Now, let's not talk about problems too much. Let's more talk about solutions and what can be done. Because that's what we are solving as Emata, right? How can we make sure that farmers can get access to loans that they need to invest in their farm? One thing is absolutely fundamental about our model, and that is that we don't finance just any farmer. We go to organizations that work with farmers. And that's why, right, we're so excited to discuss this with you guys here today. So we work with cooperatives, aggregators, off-takers. It doesn't really matter as long as you work with substantial numbers of farmers. What we do with our partners is we digitize their day-to-day operations that we will show to you, or Lillian will show to you in a minute. We make sure that the farmers that you work with can get access to loans so they can invest and increase their volumes, which means more business for you. And as I already mentioned, by eliminating the need for informal money lenders, we substantially reduce side selling. Now, for farmers, we make sure they can get access to loans that are tailored to what they can handle in terms of amount, that are much, much more affordable. In our research, it turns out that our loans are about 5 times more affordable than the farmers are using today, but I think we'll get back to that later as well. And we use our partners to make sure that we can aggregate repayments, because that is also often an issue with farmers, that they're not used to repaying loans digitally. That is sort of the high level executive summary of what we do, but Lillian will talk you through the details of how this works.
Yeah, so it's quite simple how it works. We collect the data that currently is mostly paperwork and convert it and digitize it. We work to collect this data through our partners, the aggregators, and also farmer cooperatives. So once this data is with us and synced with us, we then turn that data into credit limits. We use the data that we receive to analyze a farmer's production and then come up with custom or tailored credit limits for a particular farmer. Then third, we then make sure they know these limits or how much they can borrow from the cooperative and provide these loans digitally. So there's not so much paperwork, actually almost none. There's almost no paperwork needed to get this loan. All they need to do is just walk to the partner or aggregator or off-taker to take this loan through WhatsApp. I will explain a bit more of how the data collection happens. So we turn the data from old books, as you can see in the picture, we turn it from books and papers into a system, which is an MIS. Next slide, please. This MIS allows for the cooperative to improve their processes by providing a CRM for their farmers, so their farmer records are always up to date. We also allow them to keep track of the daily deliveries that farmers make or the regular periodical deliveries. We also help them to track the changes in price, because we realize that's also something that changes given the changes in seasons or like the prices that the off-takers take the products for. Then we also help them track expenses that are taken by a farmer in terms of advances or loans that they facilitate as a cooperative or as an aggregator, and help them make payments at the end of each period, and also issue out receipts to farmers, so farmers have a big picture of how they're performing, but also how much the co-op is owing them. So after we've collected this data, after we've allowed the cooperatives or aggregators to improve their processes, we see this data coming to, we have an agreement with them where we can use this data to create very custom loan products basing on their credit limits and production. We combine this production data with weather data, and in some cases like crop, we use satellite data. And this allows us now to know how creditworthy or how lendable a farmer is. We've noticed that at the moment, the average farmer will borrow up to 1 million Ugandan shillings. But we also have seen farmers that borrow up to 6 million Ugandan shillings. The lowest amount going at 100,000 Ugandan shillings. So after we have determined the creditworthiness, we then make it known to the farmer through SMS that they are able to borrow from the cooperative. A farmer will just walk to the cooperative with a national ID, and the cooperatives are very familiar with the WhatsApp platform and can use the Emata chatbot to initiate or request for a loan. These loans are received within 5 minutes, so the farmer doesn't have to wait so long or hand in too much paperwork. We, however, make sure that we have the farmer sign agreement to just help us explain the terms, the simple terms of the loan, but also keep record of, keep in line with regulations of the nation. So let's talk a little bit about the impact of our loans. What we've seen now, starting with dairy, is that the average farmer has about 10 cows, and these cows give, let's say, an average of 4 liters a day. And this allows a farmer to just make about a fair amount of money per month. But we've seen with the taking of loans, we've seen that farmers' production has increased. For example, one of the examples I can give, a farmer could buy a hybrid cow that will almost double their production, and then they will be able to earn back the money even quicker. We've even seen farmers that pay earlier because their production has increased very fast, and their profitability or their increase in income also almost doubling by the end of the period. So we know that the loans are working. We know that the loans are affecting their behavior because we've seen farmers bring more milk to cooperatives than they did before we started lending. Yes, so I'll allow Bram to maybe take us through how far we are now.
Yeah, apologies for the many numbers on the slides. I will try to talk you through it gently.
Yeah.
So COVID has, I guess, affected all of us because we, of course, need to be out in the field, which wasn't allowed for most of this year and last year. So we haven't gone as far as we would like to be, but I'll promise you we're catching up very fast. We gave out our first loans just after the elections, actually in February, and we have so far only done the dairy sector. We wanted to launch in the oilseed sector actually last month, but unfortunately the partner that we worked with couldn't be ready just in time for the season. So we now push that to Q1 next year. But I'll get back to that in a minute. But here you see that actually as per October, which is not on this slide, but we actually have 4 dairy cooperatives that are live on our platform. In aggregate, they have more than 2,000 farmers. The number of lendable farmers, right, farmers that we think are eligible for a loan or should be eligible for a loan is over 500 at the moment. And we have issued definitely more loans than you see here in September. I don't know the exact number, but we have issued more than $50,000 worth of loans. As I mentioned, we're catching up fast. So I think by the end of this year, we should have about 7,500 farmers to whom ultimately we have provided around $150,000 worth of loans. Now I know that only maybe some of you are interested in dairy, so no worries. This is not all about dairy,
Yeah.
but indeed, as you can see in the slide, we started in dairy because it's very big, especially of course in Uganda. But we're ready to launch a pilot in oilseeds with a partner that has 37,000 farmers, as well as for corn, where our partner has about 50,000 farmers in the central region in Uganda. And we're in advanced discussions to start doing coffee, although we have planning that for the second half of next year. We had a lot of interest, nuts, fruits, poultry, vegetables, fish. So hopefully during the Q&A session, you tell us which value change interests you. And then after this, we can hopefully start discussing that. At some point, we will go abroad, given the fact that there's many of these value chains, and some of our partners actually are active in multiple countries, but let's not focus on that here. What I think is very important is how we look at partnerships with organizations like yourself. We are a partnership-led company. So as I mentioned, we don't go to just any farmer. We only go to farmers that are a member of some kind of association. So here you see a selection of the partnerships that we have lined up. So in dairy, we work with Haver, S&V, and the Dairy Development Authority. Collectively, they actually have more than 150,000 farmers, but quite a lot. And what's special about dairy is actually that we do cash loans there. And with cash, we mean mobile money. We will launch the pilot in oilseeds with Mezzanineware, an organization that maybe some of you know. They work with 37,000 farmers that we have rounded here. And here we tie our loans to inputs. And that is the product that we'll use mainly for non-milk crops. We will mainly tie it to inputs. Either the inputs sold by our partners or input dealers that our partners are comfortable with because they know they're good. We will launch our corn pilot together with GrainPulse that maybe some of you know. Again, same story, those will be input-based loans. And coffee, we're in advanced discussions with Sukafina or Yugakov, as they're better known here in Uganda. Same story, we'll be financing input loans. And hopefully in a couple of months, some of your logos will be on this slide and we'll be working together. Now, if this sounds interesting to you, that's great. What we look for in a partner, we have actually listed here. So we look for a certain scale, and that is because we develop our credit scoring algorithms specifically for a particular crop. And that scale is not carved in stone, but as a rule of thumb, if you work with 10,000 farmers or more, that should be absolutely fine. Secondly, the crop that you're working with should be credit scorable. We use multiple approaches to credit score a crop, whether it's historical delivery data, which of course is great in dairy and also pretty useful in horticulture, where sometimes you have 4 harvests a year, or in others, as Lydian has already explained, we rely much more on satellite data. But as some of you may already know, satellite data works pretty well for certain crops, but is still not ready for other crops. But yeah, we can go into those discussions maybe outside of this session. And the third criteria that we tend to look for is that ideally our partner is a central buyer of the produce of the farmer. This is important for us because that's partly how we ensure that repayments are coming our way, because we check off the repayments from the payment that our partners make to the farmer. Because as I mentioned, many of these farmers aren't that comfortable yet with transferring money digitally. So that is in terms of suitability. In terms of how we work. So Lilian explained that, right, you can break down our activities into 3 steps, right? We help our partners get digital, we do the credit scoring, and we give out the loans. In terms of digitizing our partners, we have the MIS system that Lilian has demonstrated how it looks for milk, but we have adjusted this for other value chains. But if you as a partner already have a strong digital system, there's absolutely no reason why you have to use ours. You can use ours if you like, but if you say like, hey, listen, Ron and Lilian, this is all great, but I have a good system, no worries. We just plug in as we're doing with some of the partners that you see here listed on this slide. So yeah, you can use it, but you don't have to. Then with our partners, we sign an MOU. It's not a very long document, but at least it specifies, right, who is doing what, and what are we paying for, what are you paying for, and especially, right, what happens if we give out loans? Where do we expect help from you, and where do we take the risk, and what are the things that we're doing? Ultimately, let me already maybe put this up front. We are the lender on record. Right, we are an MFI, we're a licensed institution, and we are the ones providing the loan. But we have to be realistic that in rural settings in Uganda, with farmers not having a smartphone, there are certain things that our partners do for us. And as Lilian explained, part of that is, right, if they don't have a smartphone, we expect our partners to help them out with their WhatsApp on their smartphone. Lastly, we have designed our systems to work in a low data environment, but there still are minimum requirements in terms of connectivity. Don't worry, we can advise you on that in case you struggle a bit. And indeed, there are some hardware requirements, right? Mainly smartphones. But if you also like to use our MIS, you need a computer, but it can be 10 years old and it will work just fine. And we tend to be, right, as part of our process, we tend to advise our partners on which hardware to use. I have the feeling we may get back to the slide, but in terms of business model, just briefly, right? So for partners like yourself, we don't charge anything, even if you use our MIS. This is all free of charge. This is what we do. And we earn our money through interest. We charge 3% per month on our loans, no fees, no nothing. I know I'm talking to an educated audience, so you know that, right? 3%, is actually a very good deal, regardless of which person gets the loan. But in rural areas, it tends to be a deal that nobody else is able to match consistently. As I explained earlier on, right, the informal money lenders are the major lender to farmers today, according to our research at least, and they charge up to 20%, but at least 10% from our experience. Other digital lenders, right? They're in the news with big numbers. They've raised 100 million, 200 million, but they charge incredibly high rates. 7% is about the minimum. If you look at Tala, Branch, or the mobile money loans of the telcos, they're very expensive. SACCOs are there. They're slightly more expensive than us, but I guess most importantly, and maybe something that you all have also experienced, is that they're not the fastest, and often they don't actually have the money ready to disburse a loans. And of course, as a farmer, right, it's absolutely important that you get your loan in time, otherwise you miss the season. So we're very affordable, at least according to our farmers. If you're still not convinced why you should be partnering with us, obviously you should. Here are a couple of reasons. The most important one is a very obvious one, right? We do where banks are failing, lending to farmers, right? This is possible, and we're doing it, and we love it. So hopefully we can also lend to your farmers. The other reason is we are incredibly strong technology and big data focused company. So all the steps that we explained, right, the digitization of our partners, the credit scoring, the giving out loans, that's all fully automated. That's why we're actually able to offer the rates that we're offering. But also most importantly, as Lilian already explained, the loans are actually given in 5 minutes, which is great for a farmer, right? They can just ask for a loan, get the money in, and buy the inputs and be ready for the season. What we haven't explained, but I personally find quite interesting, is that actually we turn the process around. So when you go to a bank and ask for a loan, that's the point where the bank starts thinking about, should I give you a loan, yes or no? And then, yeah, unfortunately, that process tends to take sort of 6 to 9 months. We turn the whole process upside down. We look at the farmers right at the beginning of the season based on all the data that we have, and then we decide who we find lendable and who not, and for which amount. And we make these amounts available to the farmer by SMS. So the farmer always knows, okay, right, season is coming up. I look at my savings. I actually want to buy seeds and fertilizer. And they already know, okay, through Emata, I can borrow, 500,000 shillings, just a random example. So this certainty of funds, of course, is very important as farmers prepare for the season. And we can do that because we have this very strong technology focus that we use under our lending process. We don't just give loans, as explained. We have our MIS that we give to our partners and help them digitize. Again, right, some of you may have very good digital skills, so then this doesn't apply to you because you already have them. But especially in dairy, we have seen that, they love working with our system, right? It's sort of the next thing that they all aspire to after having worked on paper or having worked with Excel. And still, if this doesn't convince you, we have definitely managed to convince a lot of partners. This is just a small selection. Rabobank Foundation is probably an organization that many of you are familiar with, given their importance in the agricultural sector and the fact that they are the second largest agricultural bank in the world. Plug and Play may sound very funky, but this is a Silicon Valley based investor. And they were in fact the first investor in Google, Dropbox, PayPal. The list is quite long, and they're one of our partners. FSD Uganda, Financial Sector Deepening Uganda, the full name, a very important partner of us. With their support, we've actually been able to develop the system, and I like to say that they're a very knowledgeable partner. UNCDF, and as I mentioned, the list is quite long. So we are, we like to think not your average startup. With that, I like to round off our presentation and hopefully go into a discussion with an interesting Q&A.
Excuse me. Thanks, Bram. Thanks, Lillian. That was excellent. We had a number of questions come in through the chat, and I think we'll just we can help kind of go through them quickly and let you kind of give your responses. But to start, I think we had a question from Alfred, which was, how do you ensure the loans that you're delivering are not directed to other non-farm activities?
Yeah, excellent question, and one that's obviously also very important to us. Now, as I have shown on the partnership slide for dairy, we actually give mobile money-based loans, and the purpose is only self-reported, so we don't control it. However, for the crop pilots that we're launching in February, March, we don't disperse our loans in cash. There's a limit that they can spend at selected input providers. Typically, the input providers that our partners work with, either they are a supplier to these dealers, right, via the fertilizer or the seeds that they like their farmers to use, or they just tell us, right, these input shops are popular among our farmers and we trust them. And then only the person who is selling the inputs can sort of confirm the loan. And obviously, there could be a scenario in which, right, the input shop sells seeds and then the farmer gives it immediately back for cash. But ultimately, we will find out these things. So there, loans are not disbursed to the farmer. We actually disperse it to the shop, and the farmer can just be shopping within its limit. What I think is important, we realize that in many of these value chains, farmers tend to buy these inputs throughout the season, so not just in the beginning. And our product is actually allowing farmers to sort of do their shopping, right? They first buy the pesticides and the seeds, then at some point, and a few months later, they buy some fertilizer, et cetera, so they can spend this limit throughout the season. But indeed, we don't disperse it in cash. Only the import dealer needs to confirm it. So that's a pretty strong sense of control in terms of making sure that the farmers use it properly.
Oh, great. Thanks for that response. Yeah, I mean, it's difficult to control that usage of the finance at that stage, and so it makes sense to be able to work very closely with the input suppliers to help to verify how that money is being utilized initially. A next question, I actually shared it with Gregoire. It was related to sort of your monitoring, evaluation, and learning aspirations, both for yourselves, but also with your partners. And Gregoire asked the question around what type of data is collected, and then what's the rationale behind that selection. And so that would be great to hear a little bit more about that, especially in reference to what Lillian presented on the impact for dairy farmers within your system.
Yeah, very good point. So the data that we collect sort of is mainly around, right, what are they actually producing, and factors that help us allow to predict what they're producing. So the first one, right, what are they actually producing is something where we can measure our impact. So we can actually see, right, after we have given a loan to our farmers, where the production is going, 1 month, 3 months, 6 months after we provided the loan. And obviously we can compare that to farmers who could have gotten the loan, but didn't get one, right? So they're fairly comparable. And that makes us pretty unique, especially towards the investors that we work with, because everybody wants to see impact, that we can actually show the impact on the farm level, because we collect the data on how much they produce, and of course what the prices are doing. And then you have these two things, you know the household income. Now the critical thing, of course, is for us to be able to predict how much a farmer will be producing, and that I can't give a clear-cut answer to, both for reasons of a competitive nature, but also because it actually differs per crop, right? What I can disclose is if there are many harvests, right, like for milk, where there's a harvest every day, or for horticulture, with a sort of 4 harvests a year, we can rely quite a bit on the harvesting pattern and how stable it is, and how that fluctuates throughout the season. For crops that are harvested less, right, like coffee that is sort of harvested 1.5 times a year, or oil seeds of corn that are harvested 2 times a year, we rely a lot on satellite data. So right, we know that a certain field gives a certain production. So what are the characteristics of this field, right? And then a new farmer comes in, we look at their field and say, okay, right, this field is very similar too, and that's how we tend to do it.
No, thanks for that. Yeah, the next round of questions is sort of related to the, I think it's coming from Emilio, and then there was another question towards the end from Dorothy, which was really related to kind of loan repayment overall. And then you had the traction slide, and you showed that you have about 150,000 USD that's been distributed to date as finance. It's been accessed. How much of that is, I guess, been repaid to date at this point? And then when there is issues of loan default, who's responsible, the partner or Emata or the input supplier, for following up on repayment? How do you distribute that responsibility?
Okay, I think I'll start with dairy, because that's where we started lending out. For the period that just ended, we actually registered no failed loans. There was one unique one where we thought it would become default, but in the end, he actually came through and paid all the backload amount. For the input loans, we mostly rely on our partners for the repayments. We ensure that we add a bit of guarantee on some of the loans, especially now that we're in pilot, so that we manage the risk a bit. For dairy, it's mostly we manage the risk through our relationship still with the cooperative, and the fact that they have a very close relationship with farmers. And yes, if in turn a farmer still ends up, because there are those bad debts, of course, in turn, if a farmer ends up not paying, we introduced a mechanism to at least have a cooperative pay interest on some of the loans so that we don't entirely have a failed loan. Yes, and then we hope to study the trend as we go, but for the first season, we actually haven't registered any fails yet. Yeah.
We actually had one with the farmer who who didn't make it to the end of the season.
Yeah.
Yeah, well, he unfortunately
He passed on. Yes.
So for crops, indeed, let's be realistic.
Yeah.
We do expect a difference in crops, right? For dairy, it's a bit easier because, right, if times are tough, right, there's milk almost every day, so we tend to see very good recoveries even when there are issues. So for crops, we look at this differently, right? We sort of look at, okay, how much data is our partner able to provide? So, right, how good can we make an assessment whether we trust this farm or we don't? And subject to that, subject to how volatile it is, we either work with a crop insurance provider to cover some of that risk. Crop insurance is normally incredibly expensive, but thankfully in Uganda it's heavily subsidized. So that makes it actually quite an interesting product. And indeed, some of our partners actually have guarantees or guarantee providers that they work with. And actually with one of our partners, they have a guarantee provider, but it's not so good. So we actually share the risk. In principle, we are the lender of record, we take the risk. But with this partner, we agreed that, right, of the 100% credit risk, they take 10%. So, right, if no farmer repays, right, we take 90% of the loss and they take 10. But we look at it from a crop to crop basis. Most importantly, if something like this happens, right, obviously we don't want to put in place mechanisms that can somehow harm the relationship between the farmer and the partner. So we tend to always first call our partner, get their view on the matter, right? What's happening to this farmer? And typically there's a very good reason why they're not able to pay, right? Their crops are maturing late, they're waiting for a better price, you know, all these things happen. So we normally first talk to our partner and then we do contact the farmer directly, right? And we discuss with them, we validate the story with them. And normally that is enough to come to an agreement of how this will be done. For crops, we have a policy that, right, if we don't have the money 1 month after when the harvest is supposed to end, so end of the harvest, we take 1 month, that's when we consider farmers to be in default. Because, right, almost 1 month after harvest, or let's say 2 months after harvest, yeah, the new season is starting, and it's very unlikely that we're going to get repaid. But yeah, we first discuss with our partners, and then we approach the farmer. And all these things are explained in the MOUs that we signed with our partners.
No, thanks for all that information. That's really helpful for all of us, I think. I had a follow-up question, but you just started to answer it there at the end, which was term limits and repayment periods and how you handle those across different crops and value chains. I would imagine with dairy, if you're investing in a cow, it depends on, is the heifer of full maturity? Is it about investing in AI services? And then the term would shift and change for productivity purposes. Whereas from like you said, seasonally with seasonal crops, grains and legumes and oil seeds, you'd have a different method 1 month after the term of harvest. How does that negotiation go for you with the partner? From your experience, it'd be really interesting to understand as the MFI, what's in thinking about your partnership model, how does that negotiation usually play out? Because there is a lot of research that shows variable term limits can have a better impact on repayment and farmer uptake and engagement with digital MFI service or digital FI services. How do you negotiate that within your partnerships, but also just from your experiences?
Yeah, we have a certain range within which we work, right? And we have the arguments why the range is the way it is, right? We have our funding costs, we have the risk costs that we assume, and we have certain costs just to be able to disperse a loan, right? Unfortunately, mobile money fees are still where they are. And in practice, we have always agreed on an interest rate that is between 3 and 4%, and actually 4% has hardly happened. So it is more what is the final percentage? Are we using insurance or are we not using insurance? Who's going to cover those costs? But they tend to be the details. And if a partner comes to us, Abraham, we want our farmers to have access to a loan of 2%. and they're not willing to, right, give us guarantee to reduce our defaults or give us access to capital that makes our capital cheaper, yeah, then that's simply not going to work. But our partners tend to have enough experience in terms of dealing with banks that they know that this is not easy, and that certainty of funds and a partner that actually delivers is so important that, yeah, knowing where our rates are, they tend to be quite happy with it. And I guess ultimately, right, it's the farmers who pay for it. And if the farmers are happy, they're happy. And trust me, we had farmers clapping when they heard our rates, because yeah, they're used to pay, right, 10% and above. So 3% of course sounds substantially nicer. So yeah, the details, of course, right, the devil is in the detail, but we tend to agree upon the range pretty fast, and then, right, ultimately we managed to nail it, especially for the pilot stage, and then, right, the rest is calibrations.
Okay, no, thanks for that. That's great. Just to understand how you have to go through that exercise and thought process with the cooperatives, the farmers, and then your partners as well, and your own internal needs as a business. And so I guess this isn't so much a question, but I think it might be, it's from Lydia, and it's from NCBA Clusa, and she mentions most SACCOs also do not lend to farmers. Most of them lend to formal workers or people groups with stable, regular incomes. I guess there's sort of somewhat of a clarifying question built in there about your model of the types of cooperatives that you aim to work with. Seem to be more multi-purpose or, aggregation, agricultural cooperatives in this case, but you have SACCOs also on that last slide in terms of, comparing your value proposition. Do you plan, or have you, does it depend on the partner, the type of cooperative you would work with? Is a SACCO some type of organization you could expand into? What are your thoughts on sort of that?
Yeah, interesting question. It's actually a question we debated way back in 2017 when we started our journey, because we also thought that, right, this is what SACCOs are supposed to do. SACCOs are supposed to help rural communities, they're rural banks. And obviously, if you're a rural bank, yeah, you should be financing farming, right? Because that's the main rural activity in Africa. But yeah, we quickly found out that the SACCO model is not delivering on its promise. Looking at cooperatives that we work with, some of them have a SACCO, and yeah, there are definitely exceptions, right? There are good SACCOs out there, but most of them really, really struggle. And essentially, they tend to behave like mini banks. So they tend to be as slow, and indeed, as I see here in the question, right, as rigid in terms of what they expect, right? Formal workers, indeed, right? Somebody has to have a pay slip, yeah, right? Yeah, good luck with a farmer in a rural area. So we sort of position ourselves as sort of the bank for your organization. So right, for the dairy cooperatives that we work with, yeah, in a way, we are their SACCO. Obviously, we're not a SACCO because we're not membership owned, but yeah, we are their cooperative banking partner. But indeed, yeah, the SACCO model looks incredibly promising on paper, but yeah, for a couple of reasons, it doesn't seem to deliver on its promise. And I think fundamentally, the most important one is that, right, financing farmers is what we tend to call a high volume, low value game. So high volume means, right, you do many loans, but they are low value because the loans tend to be small and short, which means you don't earn a lot on a loan, right? We tend to earn, right, we give loans as small as 100,000 shillings, which is about $25. We literally earn $2, $3 on that loan, right? And then we have to deduct our costs, which is obviously, right, very little. So the moment you work manually, that's not going to work, right? Because the moment one employee looks at it for an hour even, yeah, you'll spend that money. So the only way to do that is by automating. And banks are already strong, they struggle quite badly with automating their processes, let alone that SACCOs will be able to automate the processes, right? Because yeah, they're mini banks, they have smaller budgets, they have less IT staff. So for them to do this digitally, it's going to be a long shot. So in the long run, you know, in order to service many farmers, and hopefully that's what we're also trying to achieve, to get interest rates down, the only way to go is technology. especially for farmers, right? Because that's a high volume, low value game, and the only way to do that is automating. And yeah, it's unlikely that Sarcos will succeed in that because they're not that type of organization.
Okay. No, thank you for that perspective. And you also answered Felix's question in the process, which was, is there a minimum amount a farmer should demand, or is there a minimum loan size? You said $25 in some cases. So thank you for kind of getting to that question too, because we're getting short on time, and I have 2 more questions left, I think, within the list of the chat, but also some of the ones I've been thinking about myself. The first question is sort of related to, well, it is related to your ERP and the MSI software, and really this question of that we're all sort of wrestling with in this space, which is around reaching some of the more marginalized and vulnerable groups of farmers in different countries and different subregions of a country who may not have access to digital tools or digital literacy opportunities or computer skills training, and bridging that gap, right? And I just wanted to hear your guys' perspective on your experience bridging that gap. What you mentioned earlier, the partner also has to take on some of that role. So maybe just keeping it within that space of how that partnership can function. And then the last question is just, you mentioned it a little bit with one of your slides, but maybe just offer a little bit more information about your scaling plans and where, what that means for you across Sub-Saharan Africa or even to other regions, and what you're thinking in terms of that as a business. So those are the last 2 questions in the last 10 minutes. Nothing small there.
Okay, I'll talk maybe about the how we handle the digitizing, and then Bram will answer the scaling. So yes, we have found that some partners are less digital than others. Some already use Excel for data collection, others are paper-based, and some have hardware that we can use for the MIS and some do not. So through our experiments this year, we began to understand how to help the less digital partners by allowing them to actually share with pictures or with to share their information, so that we take them through the process of entering data. So we actually have an impact team that works very, very closely with these cooperatives and takes them through the process of data entry where needed. And we do not try to change behavior because that's very hard. We just try to hold their hand by using what they have, allowing them to send through information in the formats that they can, that is through pictures, through Excel. And then in some cases, we also take the risk of allowing someone to handhold them in data entry. We have seen that change from the point when they couldn't enter their own data to a place where they can enter almost 5 months of data historical because of the handholding. So that we don't just do the one training, we are with them through the journey of transforming data from local or paper records or Excels to the MIS system. We've also seen, we also created features that allow us to plug them in on all the historical backlog for up to 2 years of historical data by just importing these Excels into the system. And they're already plugged in, they just search for the farmer and enter the deliveries as expected. In our design process, we also take the learnings by watching how they interact with the system and innovate around how they understand it, instead of us creating something fancy and they cannot use it. We watch how they use it and modify it accordingly. Yeah.
Yeah, and it's actually interesting because indeed it's the element where we struggled most with as a company. And we launched our first digitizing MVP back in 2018. And yeah, trust me when I say that thing has changed dramatically in many ways. I think the ones that that were the big ones is we first had an app because everybody thought apps are the future. And we realized that the people that we work with, right, sort of the administrators, the managerial people in that region, they prefer a desktop, so we went for a desktop.
It's
Like everybody
more-
else, it was cloud-based, and then we realized, okay, there's no way there's enough connectivity, so it's all offline first. The synchronization that we've built behind the scenes is quite impressive. The designs that we came up with initially were very advanced in terms of graphs, and then we realized, oh,
I don't understand.
people don't like that. People like their books. So it mimics how a book looks. So it went through a massive evolution. And especially as Lillian said, combined with our impact team who was there on the ground, to handhold, to train, to teach, just to build trust. Yeah, that seems to have been quite a winning combination for us so far. In terms of other expansion plans, briefly. So next year for us is the year where we'll do a lot of crops. So we mentioned some of the initiatives on the slide already. So oilseeds, corn, and coffee are already confirmed that we're going to do next year. Obviously, we're based in Uganda, and Uganda has a huge agricultural sector. So we know we're not done here yet. And realistically, we think about expanding into other countries in the region starting 2023. One of the reasons why we've picked these crops, right, milk, coffee, oilseeds, and corn is, right, these are very important crops in most of the surrounding countries. So, right, once we have developed our algorithms and we have data, this is actually useful when we expand abroad. So, yeah, there has been some thinking behind what should we do next, keeping in mind that ultimately we will go abroad. But yeah, we're realistic enough that Uganda is quite a big market, so we're not going to rush it.
No, thank you for that. I think that's helpful for everyone to understand sort of the pace of scale that you have intentions around, and that's important for all of us to know as we can sometimes chase opportunity and lose efficiency. So thank you both very much, Bram and Lillian. Thank you so much for today. This was an excellent discussion. Thank you for saving so much time just to answer all of the questions from the group. There was a number of them, and sometimes it can feel like you're in the firing range, but this was great. And I also want to give a special thanks. We had a great turnout for today. And just a special thanks to the EMEA local network in Uganda as well, and for you all for making the connection together with Harrison and the rest of the team at EMEA. I think this is fantastic to be able to speak specifically to the needs of one of the EMEA local networks and specifically to the needs of Ugandan farmers with these webinars. So thank you so much. And I just want to end the webinar there. If you have any last words, Bram and Lillian, please take the stage.
Yeah, thanks for having us here. And needless to say, right, if you like what you hear, if you think that it's important for your farmers to get access to loans, please reach out to Lillian or me, and we're happy to take the discussion forward and find out how we can help your farmers.
Yes, and we are on all social media platforms. Emata is on Facebook, it's on LinkedIn, it's on Twitter. Reach out to us on www.emata.ug and you'll find our contacts there.
And this video will be on the EMEA website too, so you can watch it again on recording if you want to. So thank